What is up, everyone? Welcome back to yet another video. Is now a good time to start your dollar cost averaging? Do we wait? When do we buy? The FOMO is very real, especially for beginners. But as I've been saying in all my videos, it's not difficult if you stick to your plan. How do we make a plan? That I will tell you in this video. Um, I have a few fun examples. I'll talk about them. I'll also talk a little bit about the exchanges I'm using. Maybe if you want to follow along or not, that's also completely fine. Uh, Everything I say is not financial advice. It is, however, the things that I'm doing. So either follow along or not, completely up to you. I wouldn't blindly follow me. So yeah, don't do it. Let's get into it. All right, guys. So in this video, I will be showing two exchanges, which both I use personally. If you've watched some of my other videos, BitUNix is my personal favorite. I use it the most because I think it's the easiest, the best, and it has very good risk protection, especially if you're a beginner. Now, if you want to use this exchange like I do, uh, it does not require any KYC or a VPN if you are in the US, so that could be very useful to you. Um, they also have over 8,000 USDT of newbie benefits if you use that link in the description below. Obviously, it's completely up to you. You feel free to use it or not. But that is the number one I shall be using and talking about. The other one is called BTCC. Now they have over 10,000 USDT in welcome awards as well. Uh, this one is also an exchange I use. It is a little different, but different is not necessarily worse or bad or whatever. Both of them are very good exchanges. Both of them are very good platforms. As I said, feel free to use them or not, completely up to you. But I will be using them in this video, and I've used them in a lot of the other videos as well. All right, and here we are in the main part of the video. Back at CoinMarketCap, I start almost all my videos in CoinMarketCap, mainly because it's one of the best sources of information for crypto in general. Now we can see the crypto market cap has bounced back a little. I think it's over 0.3 trillion since the crash, let's call it that. Personally, I think the fear is, well, it shows it as well. The fear is not yet out of the market. We have bounced back a little from extreme fear, and this is a very good indicator for what the market in general tends to do. If we think of it as a rubber band, as the farther down it pulls, eventually it's going to pull back up. However, I do not think we have seen the worst of it. I do not think we have seen the end of it, considering basically all the bad world news. Crypto is very correlated with bad news and good news. So today, Trump announced that he will reduce the tariffs a little bit on certain countries, make some exemptions here and there, and for basic trading for economy, that is good news. So we can see the market reacting to that almost instantly. Uh, but you can also wonder, like, what when the next crazy plan emerges, the price will bounce back down immediately. So please be wary of that, especially if you are trading with leverage or any kind of volatile products. Um, Crypto in general is very volatile, so please be aware of that. Don't over leverage or take too much risk thinking the market is going to boom. Always plan for the worst. Then it can only be better than what eventually happens. Now on that note, I have been saying for months now that every time the price dumps, we buy. So every time we hit this extreme fear, we buy. I buy in fear as well, but extreme fear, always look at what dips the most of your long-term holds. Assets you think will exist in the future, will appreciate in value in the future. So during these extreme fear moments, the price will inevitably go down. So it enables us to buy cheaper in the long run. Now, I have grabbed my BitUniX chart. I did a little pre-charting before this video. We can see a very strong support zone here. I have enabled some technical indicators because people were asking about those. Now, if you ask me, do you use these all the time? No, I don't. I'll basically do more or less a naked price action. If we see a big move up, it's safe to assume it's going to go down. And we can see this happen across Bitcoin all over the place. Very volatile, but up, down, up, down, up, down. This is normal. And considering that I don't trade with leverage a lot, most of my buys are long-term holds, DCA portfolios. All we have to do is buy these big dips, these big fair moments, such as these, these. The further we go down, we can see these massive red candles. Now, obviously, it's very hard to be online at that exact moment that it dips, that it happens, to catch this little point here before it shoots back up. Now, that is where an exchange like BITUNIX or BTCC or an exchange you like to use, that is where you can get the benefit. That is where you can use the benefit of an exchange to place your limit orders. As opposed to swapping in your DeFi wallet, on an exchange, you can set limit orders. There are some decentralized platforms that also do this, but you can set a limit order. Let's grab the little brush. You can set a limit order at this point, or at this point, or at any point you want, like even if it hits it again. You can set them all in advance, and you do not have to be online at that exact moment. You can let's delete that. You can pre-place all your trades, all your limit order, but you can also set take profits. Similarly to leverage trading, you can also do this with your spot buys or your DCA long-term buys, the strategy that I've been talking about. And obviously we want to see eventually we want to see some results. We don't just want to be buying. Now, I have devised a little short-term plan of or a little tool, how you can look at how much your potential profits are going to be. Now, if we look at Bitcoin, average annualized return for the last 5 years, or the last 10 years is higher, but let's use that last 5 years. 60%. I'm going to round it up to 60%. If you don't agree, you can do the calculation yourself with a little low. But I'm going to use that 60% just to make it a little bit easier. So let's say we invest $5,000 for starters. You have some money saved up. We want to move it in Bitcoin. We buy it. And the 1st of January, we buy it. The interest rate we put on 60%. We do this for 5 years. Let's say each month we add another 500. Obviously, you can do this calculation with any amount you think you want to do, but I think 500 is realistic for a lot of people. If not, it's completely fine. But anything lower than $200, then I'd probably look for something else or invest in other assets. Or if you are in a part of the world where the dollar is worth a lot more, has a lot more buying power, then maybe it does work for you. But let's use the easy $500. Now, we enter these values, and in 5 years, we have an incredible return, a compounded rate of 60%. That's 5 years. Depending, obviously, if Bitcoin keeps up that yearly average. Now, obviously, there can be some bad years in it, but if we keep buying those lower prices, we add our position every month, that will inevitably, if the price goes further up, inevitably increase that 60% rather than lessen it. The only thing you have to make sure of is that you use money that you do not need at that particular time for a few years at least, and make sure you keep it on it and keep your buys up. If we never know exactly what price is the bottom of Bitcoin, but if we keep buying, eventually we'll hit the bottom and we'll go back up. Depending, of course, if Bitcoin in 10 years will go up. But history has shown that Bitcoin is growing, and with all the positive crypto news, basically, like countries adopting it, Trump adopting it, Canada now also moving towards Bitcoin, uh, it's safe to assume that for at least the next 5 years, Bitcoin will continue to go up in value. And obviously, there's a finite amount. So, with basic supply and demand, uh, basic supply and demand rules, let's call it rules, basic supply and demand dictates that the more rarer the supply becomes, the higher the price goes. More people want it, they're willing to pay more for it because it becomes more rare, more scarce. So inevitably, that also will drive the price up, especially considering uh, that the Bitcoin halving has happened and another halving is on the way. It will get more and more difficult to get more of these coins. So the more you hold, the more they should go up in value. Obviously, nothing is certain, but at least if we keep our DCAs up, it'll increase. Now that's 5 years. Let's see what happens when we enter the 10-year. That is an insane amount of money. And I'm not saying this will happen over 5 years, but we have enough margin. Like, if we keep this up for the next 10 years, even if it's half of that, even if the return is 2 million, that's still $2 million. That's an insane amount of money. And that is purely on Bitcoin. We could obviously, if you have another asset like maybe Ethereum or Solana, which you think will have a similar path, they have much smaller market cap. So the potential returns are much higher. Now, I've not done the calculations for those. Feel free to do that if you want to do it. But I just wanted to share this to give a little bit of the vision that I'm trying to share with people, the vision that I have for my own portfolio. And it's not just crypto in which I do this. I do this with the S&P 500. I do this with my stock portfolio, my ETFs, everything that dips, especially if like Bitcoin dipped. I think it dipped around 30% from its all-time high at the current price. So it did around 30%. If Bitcoin, it's a discount of 30% on Bitcoin on a finite amount of coins with countries, ETFs, investment funds, everything trying to get as much of them as possible. I think a 30% discount is an instant buy on something like Bitcoin. But again, this can also be on gold, on stocks. I think like the S&P 500, I had this open already because I was looking at it earlier today, but a 10%, and it's already back up another 4%. So even I bought around this area here because I figured a 10% discount on one of my favorite ETFs or index funds, sorry, a discount of 10%, easy buy. It's the best 500 performing or the best performing top 500 performing companies in America. Why wouldn't I want a discount on those prices? Now, granted, it's probably fueled a lot by the dip in Tesla stocks, but even then, the Tesla stock is also starting to recover a little bit. I do not think that Tesla has recovered completely, though. I do think that we will see a bigger correction on Tesla, but other than that, the S&P 500, it's here to stay. It'll be here long after I'm gone. So yeah, 100%, 10% discount, buy instantly. All right. I do hope that answers a little bit of the question. Like, do we DCA now or later? Because basically, all these extreme fear moments are instant DCA buys. And basically, now that the price is going up, now is when I would wait. Considering I bought these times, I would not buy here. And I drew this little red box here because I think that's where the price will start to move back. Now, why a box and not a line? You see a lot of people doing technical analysis with lines. I did myself right below it, but usually prices aren't that solid. A price will go near a target before it bounces back. And just using that box gives you a better visual of like, all right, we're now in a heavy supply demand zone. Now is something something's got to give at this point. Now, that's why I also added indicators in this video. And virtually, I added the EMAs, exponential moving averages, Bollinger Bands, and I used the RSI. Now, if you are new to trading and you do not know any of these indicators, that's completely fine. But what they basically do, it's a visual representation of the data shown to us on the chart. So these are averages of past candles. These are averages, similar averages, and RSI is also showing how much has been bought or sold. And it's basically the same data shown to you in different ways, created by traders of the past. Now, how I read this is we're seeing, yes, we had a lot of overbuying in this area and the price corrected down. Now, obviously, this is more a bit news fueled, all of it basically. We still have a lot of bullish momentum in the market, but we also have a lot of selling pressure, especially with more bad news in the markets. Now we see a little bit of good news, market moving up again, but we can see that all these indicators are indicating an overbought area. So it's very likely in the next few days we see a big push down again. Obviously, that can also be caught up. We can keep going sideways a little. And I think it wholly depends on news in the world. If we go further down or up, eventually something will give and we'll see a big correction. And if we go down, we buy. 30% discount. I'm not even going to say crash. 30% discount, we buy. Instant buy. Because Bitcoin will be here after me, but also after Trump, also after many, many more 4-year terms. So even if now there's fear and uncertainty and doubt in the market, that's when we make our fortune. The red days is where the millions are made. I'm not saying, well, yeah, even we will make millions if we keep this up. It will just take time, a lot of time. All right, so this is how I wanted to conclude this video. I wanted to do a little bit more of a technical analysis side, even though it's based on fundamentals. It's more or less my trading style because I've been caught out by using too much technical analysis in the past, and some bad news throws all the technical analysis out the window and you completely crash down, and none of your support lines will save you in that moment. So that's why I wanted to do this video. I wanted to talk about it. I wanted to show you my thought process. And so if you ask me now, is it now a good time to buy? No, wait a little till we see the reaction to this. And the red days is when we buy. We don't buy on the green days. All right, so thank you all for watching. And yeah, if you did like the video, please leave a like and subscribe. You would do me a tremendous favor. And yeah, see you on the next one.